we'll start the session. First of all, good afternoon to everyone. I myself, Praveen Arote, warm welcome you for the webinar on Be Compliant under TDS provision, do's and don'ts under Section 194R and 194S of Income Tax Act 1961. Today's webinar is arranged for newly inserted Section 194R and 194S, which is effective from 1st July 2022. Though the Central Board of Direct Tax has issued the clarification on the same, there are various questions coming from the implementation of the same. To address the questions of the tax persons and what exactly needs to be done and what should not be done, we have today our eminent speaker, our founder, Mr. CMA Ashok Nawar, our director, Mr. Manoj Behede, and Mrs. Priti Kulkarni. We have kept this session as interactive and more participative through panel discussions. Now, I request our founder, CMA Ashok Nawar, to start the session and encourage the discussion. Over to you, Nawal sir.
Yeah, good afternoon. Thank you, Praveen. Today, really it was welcoming that in the short period of time, good response. So we express our sincere thanks. Now, one of the important points, when the budget was presented, it was approved. And if you remember our budget speech or our budget seminar, we said 194 is going to be a very benchmark amongst all the TDS. Whatever the number of TDS cases might have happened across so far cumulatively from 1961 till now, you will see that now number of notices will get issued after a period of 1 year. Kindly mark this, when they will analyze the books and you might have not deducted the 194 income, that is the TDS under 194R. Perhaps industry might have not taken that seriously because the preparedness across the industry seems to be as low. Hello, I'm audible? Seems to be at not audible. Just a minute. Hello, I'm audible now? Yes. Yeah, thank you. So, the preparedness of industry, like it has come like GST, at least we were prepared. From 2015, GST was getting discussed, 2017, July, it started, but still industry has gone very difficult time up to 2 years because of course, the technical issues as well as. So the preparedness, even after the GST 2 years we were ready, the industry has faced the problem for 2 years because of industry preparedness as well as the government lapses. And in TDS also, nothing is going to be new. I think that story will repeat because the way that provisions has been drafted, I don't know what are going to be a googlies out of that 194R when implementation starts and then really notices get issued, or when 143(2) notices scrutiny will be there, and at that time accounts ledger will be asked, particularly in that fashion. Then number of suppliers and number of service providers will, or number of customers, all will be badly get affected because of somebody's wrong accounting or somebody's non-paying of the TDS or wrongly charging the TDS, both way. And that is the reason this is very important that each voucher, each bill passing, that is when we talk of bills payable, whenever we are going to do it, how the systems are going to be there, because let's say I'll give us a very small example before we go in the details, that let's say I give the Diwali gift, which is normal as an Indian culture. And Diwali gift we give to every person, whether it's the government officer, whether it's the customer, whether it's the supplier. and I purchase in the bulk, payable is to the X party, but distribution happens to the various different departments. Let's say I purchased 20,000 gift boxes and assume that my gifting is more than 20,000 for a time sake, we assume. So that whether I'm in threshold limit or not, that will not come. And at that time, there are all the departments, including the personnel, including the HR, including the sales, including the purchase, including the taxation, including the PR. All those departments, I give the gift boxes. How I will be accounting them, how I will be collecting the number, and how I will be collecting the TDS. All those we are going to deal in with the experts. I have the panelists, Mr. C.A. Manoj Bede, who is the director of the Bitsol India, Priti Kulkarni, expert in all the areas, but more so in the income tax.
And that is the reason
we said this. This panel discussion should help us
lay down
the system in the company, ensure from the first day we are compliant, and because of our compliances or no compliances, our customers, service providers, or anybody should not have the problem. And that is what is the question. So I will ask first Priti to make a presentation on Section 194R and 194S, the new provisions, object of that, and that you make a presentation, explain that. And after that, some day-to-day problem every industry is going to face, trade and industry is going to face, that I will be dealing it. I will be asking the questions to all the expert panel, Preeti and Manoj, and then we will be deliberating that. And thereafter, there will be a question answers from all the participants to make it more lively and participating. Over to Preeti, please.
Thank you, Naval sir. Definitely, TDS, the TDS tax base has been increasing after introduction of TCS on goods in October 20, and then in from July 20, introduction of TDS on goods over certain limits under Section 194Q. There are two new sections coming up in this budget, 194R and 194S. So definitely these are the two sections which has been introduced in budget and approved by the president and effective from.
No video.
Stop. It's there, no? Yeah, okay. So Section 194R and 194S, we are going to see the detailed provisions and thereafter the practical problems involved. Now, why Section 194 has been introduced is the objective has been clearly mentioned in the budget speech by Honorable Finance Minister. And in business promotion strategies, there is a tendency to pass on the benefits. Okay, so where in cash or kind to the supplier of services or the business partners. These transactions are income in the hands of the recipient under Section 28(4) of the Income Tax Act under business and profession. However, these transactions were not reported or they were in kind, so maybe there was escape of these incomes, and hence to bring in the tax net of such kind of transactions, the TDS provision has been introduced and been effective, made effective from 1st July 22 as TDS on benefits or perquisite provided to the business partners. So definitely a new section wherein now TDS has to be deducted when there by a resident when there is a benefit or perquisite provided in cash or kind in exercise of business and profession. So this is the main crux of the section or main objective wherein why 194R has been brought to tax or to track the transactions wherein the TDS, the income which has been escaped from reporting, will be now, it will be disclosed in 26 AS in the respective recipient, and definitely the government can track these transactions through form 26 AS. The basic logic of income tax is once any expense has been claimed by one person, it should be income in hands of others. So considering this logic, if a business entity is claiming any expense, then it should be treated as income, and it should be offered for income tax. Now 194R, to whom it is applicable? To all persons other than individual and HUF. For individual and HUF, they are given the normal TDS provisions applicable, that is business turnover exceeding 1 CR, and in case of professional income, the gross 50 lakhs in the immediately preceding previous year. So considering this financial year, we have to look the turnover for financial year 21-22 to consider the applicability for individual and HUF. For other than those, this section is directly applicable without any turnover limit. Now, what is the rate? What is the value? And since it has been introduced in mid of the year, how the threshold has to be computed? The TDS rate is 10%, and the value of benefits should, if it exceeds 20,000, then the TDS has to be deducted. Now, for this financial year, even though it has been implemented from 1st July, we have to consider the limit as 20,000 for the entire financial year. Definitely, if the benefit has been provided prior to 1/7/22, no TDS to be deducted. However, the limit has to be considered in for computing of TDS if the limit has been already exceeded. Now, there are various clarifications issued wide circular number 12/2022 dated 16th June. Because when the section was introduced, there itself it was told that clarifications will be issued, and those will be binding on both the taxpayers as well as the income tax authorities. Now, what are the clarifications issued? Section says that if TDS has to be deducted, then whether the person deducting the tax should check that the benefit that is provided is considered or will be considered as an taxable income in the hands of recipient of such benefit. Now, what I need to check, because if I am providing a business entity is providing certain benefits to a business partner. So suppose I am giving a TV to my business consultant, and so whether I need to check before deducting TDS that the person is considering as an taxable income the value of the TV in his total computation of income. Now, this is not the case that we have to check that whether it is taxable at the point of deduction of tax. His manner of computation of income, he will check, or it is his duty to check whether this transaction will fall under the taxable income. Secondly, since the logic which was said that it is a benefit that is claimed as the benefits are given but not treated as expense, not treated as income in the recipient hand, whether capital assets provided will form as a part of benefits or perquisites. Now, the circular clarifies that the capital assets provided, there are various examples, judgments provided in the circular, which says also that capital assets, though provided, will form as an income in business income. So any capital asset provided as perquisite or benefits to the recipient will be treated as benefit for the purpose of Section 194, and TDS has to be deducted at the rate of 10% if the value exceeds 20,000 per annum. Now, there was a lot of chaos, like whether sales discount, cash discount, rebate, because these are all benefits and perquisites provided to the customers. So whether these will fall under the perquisites and benefits. However, the circular clearly mentions that these will not fall under the benefits and perquisites, and this is the intention of the government, is to avoid the hardship. Otherwise, it will become a lot of calculation problem, complexity will increase. So currently under Section 194R, sale discount, cash discount, and rebates are kept out of TDS net under Section 194R. But please note, this is only the 3 categories they have mentioned as specifically exclusions. We cannot extend these exclusions for any other such benefits, and each and every benefit provided needs to be tracked or filtered from the 194R section provisions. Similarly, the circular provides certain illustrative examples for TDS deductions. So when a person gives incentives such as computers, mobile, gold coin, foreign trips, TV, or any kind of asset, then it will be considered as a perquisite. Also, there is, if any trip has been provided, or attending for a sports event, or attending for any orchestra program, anything which is given sponsored by the person to their business partners for achieving certain targets as well, will be treated as an perquisite and benefit under Section 194R. Then medicine samples provided to medical practitioners will fall under the perquisites, and products provided to social media influencer for making audio videos, and it will be treated as perquisites or benefit only if the same are retained with the social media influencer. If they are returned, they are given back, then they will not be treated as perquisites, and then in this case there will be no reason to deduct the TDS under this section. Now, in generally, what happens is the benefit is being provided to the recipient entity. However, the benefit goes to the individual in the individual capacity. So suppose I am having my business partner, but I give a business trip to the director or to the owner or the employee of that recipient entity. Now, what happens, and from whom I should deduct tax? Because I am giving this, because I am receiving the service from the recipient entity and from the individual capacity also, and hence in case wherein the individual, because the individual is associated with the entity, and hence there are business, there is an exercise of business or profession, and hence in this case the recipient becomes the the business entity becomes the recipient of the benefits. So if there is a company providing a gift or a watch to an employee of its supplier, okay, then the TDS has to be deducted of the supplier and not of the employee. However, if the benefits are provided to the consultant of the recipient entity, now suppose a doctor who is working for an hospital, okay, and in that case, what happens is the company provides benefits to the doctor. They sponsor an event, or they sponsor for a continuous medical education or professional education for the doctor through the hospital. In this case, there are 2 options. Either the company providing the benefits can treat the hospital as a recipient of service and deduct TDS. As the chain continues, the hospital may consider the benefit provided to the consultant doctor, and Section 194R will continue. Otherwise, also there is an option that the company providing the benefit of sponsoring deduct TDS directly from the consultant, treating the consultant as the recipient of entity. So this has been clarified in the circular that when benefit has been provided to the consultant of the recipient entity, there is an option either to deduct TDS of the recipient entity or directly of the consultant. Now the issues involved, let us see into it, is because if I am the business entity is hospital, I have one PAN, and I will have to deduct TDS on that one PAN, the amount of benefit provided. In case I'm deducting the consultant's TDS, I need to gather all his information, have the database, have the tracking of 20,000 limit, and also consider his PAN for reporting in the TDS returns. Check. Okay, so valuation of perquisites. What I have to consider for value, because that is the value on which I need to deduct the TDS, and if I fail to do that, there are consequences of disallowances. So now, if the benefits provided are purchased by the provider of benefits, then the value, what is the value? The value will be the actual purchase price. So suppose I purchase iPhones and give it to my dealers, then the purchase value of the iPhones will be the value for deduction of TDS under Section 194R. Then there is a option that there is a probability that the goods are manufactured by me and I give as benefit or perquisite to my business partners. In this case, it has been clarified in the circular that the price charged for these goods to its customers will be the value for deduction of TDS under this section. So suppose if I am manufacturer of mobile phone and I distribute those mobile phones to my dealers, then the cost of production will be different. However, I have to deduct TDS on the value that the price that I charge to my customers. So at what period? Because now you need to track that when I am going to deduct TDS of that product, that model, then I have to see that when this model was sold and what was the sale price of this to his customer, and this all data now needs to be maintained. In any other case other than above, fair market value has to be done, has to be considered for deduction of TDS. Now, a major impact on the reimbursement of expenses. Definitely when the reimbursement, there is a reimbursement of expenses and the invoices are in the name of service provider, and the service provider pays the same are paid by the provider directly, then there is no TDS under this section 194R. However, if the reimbursement expenses are in the name of the recipient of the service and they are paid either by the recipient or provider, then TDS will be applicable under this section. Now there is also a case wherein the reimbursement invoices are in the name of the service provider and the same are first being paid by the recipient and then they are reimbursed by the provider, then there will be no TDS. So a very fundamental rule that if the service invoices are in the name of the service provider, then there is no TDS. However, if invoices are in the name of the recipient and being directly paid by the supplier or being reimbursed by the supplier, then definitely it needs to be checked from TDS perspective. Now the circular also clarifies about business or dealer conference, wherein they specifically mention that if the conference is being held to educate about a new product launched, discussion as to how the product is better, obtaining orders, teaching sales techniques, addressing queries of the dealers, reconciliation of accounts with dealers, customers. So if the sale conference, the objective of the sale conference is for this aspect, then TDS will not be applicable on such transactions. However, TDS will be applicable for expenditure for dealer or business conference if there is an element of leisure or element of certain benefits to the family members who are accompanying the persons attending the dealer business conference. And also if there is any expenditure incurred for days which are on account of maybe an extended stay, maybe an prior period stay for the dealers. And in that case, if any family members are involved or if any expenses that is attributable to the or incidental to the dealer business conference, then those will be liable for deduction of TDS under section 194R. Given an example, if there is a sales meet for being new product launch in Dubai. However, the dealer has been given an extended stay for with his family members. In that case, the extended portion will be treated as benefit or perquisite to the business partner and it will be liable to TDS under this section. Now, the section covers that the benefit is not only in cash, but also in kind or cash portion that is not sufficient or in cash portion. Now, what will be the TDS impact when the TDS is, the benefit is in kind or the cash portion is not sufficient to cover the TDS part? Now, I have two options available. Either, because in this case, what will happen is the TDS, I will not deduct TDS up, I have to deduct TDS upfront, but since I am providing the benefits in kind, I have to recover, or how I have to do this. In this case, the provision says, or the circular clarifies that the recipient will pay TDS in form of advance tax, provide a declaration to the provider of benefit, and challan of the advance tax to the provider. Now, this challan will be reported in the TDS return of provider. Now, see how it will be complex. Is suppose if I am giving a TV to my dealer, one of my dealer, I'm a manufacturing company, and giving a TV to my dealer in exercise of his profession, wherein the value of suppose a TV is 1 lakh of rupees. Now, since it is exceeding 20,000, it will fall under benefits and perquisites, and hence section 194 will apply. I have to deduct 10% TDS on this. So the amount of TDS is under one section is 10%, that is 10,000 rupees. I will give a TV to him, and we have the provision says before giving the perquisite, it has to be ensured that the TDS has been paid to the government. Now, how I will ensure this? So I'll first inform him that I'm giving you a perquisite of rupees 1 lakh as TV in kind, and you have to pay 10,000 in the form of advance tax and give that challan to me. And when I am filing my TDS return, I have to report this transaction and the TDS. Also, as an alternative mechanism, what the circular says is the benefit, when I'm giving a TV to him, I will consider as the TDS amount as the value of benefit itself. So 1 lakh TV, 10,000 rupees TDS. So value of benefit will be 1,10,000. I have to deduct TDS on 1,10,000, that is 11,000, and report in my TDS. Now, the second option seems feasible. However, the TDS amount which has been paid will not be considered as an allowable expenditure while computing my income, and hence this TDS will become a cost.
Okay.
Now we'll go on to another section 19. Yes.
I'll just interrupt you.
Yeah.
I think we'll first complete
Okay.
the deliberations
Yes.
on 194R, and then we can go under the 194S.
Yes, sir.
Now, I could see that TDS has been made a really TDS. The whole question comes in when I go with your question and answers, or when we go deliberations. First, we talk about the generally which is happening. Generally, which is happening, that we will deal separately. A, what you do for sales, how you do valuation, and all those things. So my first question to Manoj, what was the intention to insert such a provision where ease of doing business is going to be killed?
Every coin has two sides. Same way here, companies are giving a lot of benefits or perquisites. Like suppose I'm doing business, I'm promoting my business. So there are promotion strategies. And in that, along with business, I want to entertain the people with whom we are interacting for business. So what I do, I either Diwali time, I give coins or some gifts, or I plan some leisure trips. So
company is taking the expense. What government has seen, that company, that it becomes a business expense. So even if I am sponsoring for leisure, or even if I am giving some shelling out some gifts, it is an expense, it is a business expense. But when it comes to the person who is the recipient, he is not showing in his books. And so to track these transactions, this TDS is introduced on these perquisites. So if we don't introduce TDS, then it will go the same way. It will never be able to identify. So by introducing TDS, what the government has done, that they are tracking these transactions, and by deducting TDS, naturally you are going to file the return with the PAN number. So you know to whom we have provided the services, and then it will automatically it will be treated in the perquisite column of income tax.
No, if you say that's right, the same principle, now the contestants of Rashtrapati, Mr. Yashwant Sinha, when he was the finance minister, he brought that FBT, fringe benefit tax.
Yes.
On the same logic that employees are getting benefited and they are not paying tax. But ultimately, they understood their problem and they understood that thinking was not wise and they have withdrawn. Whether you find any chances that such 194R also on the same logic which will be withdrawn?
The things have changed drastically because of now the digital age. You know that all accounting, either it is in SAP or it is in Tally. So every transaction is getting tracked. And now if I want to do business, we are deducting the TDS. Suppose now if I'm an employee of a company and I'm the beneficiary of that trip, but I'm representing a company which is doing business with the person who is giving these tickets free of cost as a leisure. So here now the TDS is going to be deducted of whom? Of the company, not of the employee. So automatically it is going to get tracked. And what the company is going to do, they will, so the TDS is deducted by the person who is making the facilities available. Company is going to get the TDS in their books. So they are also going to take it as an expense again. And again, then they are going to pay the TDS for the employee, because after all, who has enjoyed? The company has not enjoyed, but the employees has enjoyed. So this is going to be a tedious task, and at least high value transaction, I think so, it will get tracked. But on low volume transactions, I am difficult. It will always be a troublesome area. So it is quite possible that the limit what they have given, they might increase that limit so that the big transactions are tracked, and small transactions, the industry is not put to difficult times.
Preeti, you stated in your presentation that discounts are not liable to deduct the TDS. Now, whole question is, if business discounts, whether it's the quantity discount, whether it's the scheme or whatever is the cash discount, all that will not be part of a value of a perks. Fair enough. Now, you also state if I give the free material to my dealers or to my customers, probable customers or customers, then you say it TDS will be 194R TDS allowed to deduct, taking their PAN number. Now take an example. My continuous dealer is this, Mr. Manoj is my dealer, and I don't want to give him the free like this. So what I will make, invoice I will make, and that invoice I will show as a combo supply or a mixed supply with the single price, and I give that. I'm combining GST and TDS together. So whether that free which I give as a mixed supply, whether that will cover under 194R. Yeah.
It is,
Because when you are making a combo, it has to be the business what I am into. But if I am going to incorporate a gift into it, then that will be a big question mark. Like suppose now if I am into, suppose a company like ITC, they are into detergents and all those things. Or suppose along with detergent, they are also manufacturing cigarettes. So if suppose that they make a combo and there is a price, I don't think so it will fall under this. But the moment I incorporate a gift into it, a gold coin might be 1 gram into it, then there will be a there might be a problem on this, because that is a gift, and that might fall into the perquisites.
Now, Manoj, you said if it is the same type of material, it will not be covered, right?
It is a business basically.
It's a business.
We
I
are
agree.
into business
Appreciate.
and
Appreciate. Now, they have given in their circular that if I give the free samples,
yes.
say free samples of the same goods, that will be considered as the value of pulse and 194R will be deducted.
Yes. Yes.
Now, it means I have to distinguish if I give as a mixed supply, combo price, as a free, then it is a part of a business, because that is a part of scheme. GST circular is there, and that is the same logic has been applied in the circular number 12. But if I give independently free supply, then whether that will be covered or both will be covered under 194R. Can you please distinguish both?
So when I'm looking at a free supply, it is purely a free supply. So that free supply will fall under 194R. It is going to be a perquisite. So absolutely no doubt on that. And it has got nothing to do with the value of the goods. So there will be, so TDS will be deducted. And at the same time, if I have availed any credit on the GST portion also, I'll have to reverse, because if something is given free, naturally, I don't get the benefit of GST also. At the same time, I'll be deducting the TDS. Now the value is going to be, as already addressed by Preeti, if I have purchased something and if I am going to give free of cost, that is the value. If I am going to manufacture something and give free of cost, naturally the value is going to be at what price I am selling it to the customer. And if suppose I'm not able to track both the things, then it is going to be the fair market value. So when it comes to free of cost, there is absolutely no doubt that it will fall under perquisites.
Now let's talk about that. I have purchased the item for the gift, for the Diwali gift. Let's assume for time being, I am in the business of pharmaceutical, and I'm purchasing a product. Let us talk about mobile watch or mobile app, mobile iPhone. And I have given iPhone to all my customers, all my distributors, all my suppliers. Now that price of mobile, my purchase prices are purchased in lot. In mind, let us assume that it is only 40,000. But MRP of that is printed is 60,000. So what will be the fair market value? 40,000 or 60,000?
No, sir. In case goods have been purchased, and they have been provided as value for benefits and perquisite, then the value of the purchase price will be treated as benefit for purpose of TDS calculation.
But my question to you is, I'm ITO. I will say, object of making this section, that recipient is benefited and is not paying the tax on that. So for the recipient, it is the value which market is given to him, let us say 50,000. You might have purchased at 40,000. So as a ITO, when I'm taxing him, I will say first, you have shown only that 194, whatever R is there, you have shown as your income, but 10,000 is under SS. So what is your say on this?
So there are two different points on this. One is section 194R when I'm deducting TDS. So definitely while deducting TDS, it will be considered as a purchase price 40,000. Now this will be considered as an income because the section 28(4) says that any goods received in kind will be his business or his business income. How he will consider into this because it will definitely be being an issue and the issue of litigation wherein he will be the ITO will definitely ask for 50,000.
So it means it has been. Yeah.
I'll also like to address this. Therefore, if we are giving some item like electronics, so the number is already, so numbers are tracked. So if we want to avoid all this litigation, then we have to be very careful when we are, if we are want to give any gifts of such kinds, then we have to be careful that we identify the cost properly. So that not only for deducting TDS we are correct, but even the person to whom we are giving, because after all we are going to cut TDS. So the price is what I am going to declare, and the responsibility is mine at what price I have to deduct the TDS. So same amount will be treated as a income, and assessee cannot and the income tax officer cannot challenge, because first he will have to challenge my values, because I have already disclosed that in my return at the time of deducting TDS.
So but definitely there is a gray area.
Yes.
For income tax officer. Ultimately, faceless assessment. Now he doesn't see the face, so he doesn't see the face, so he doesn't get the smile also from you. So anything you will not get. So he definitely again raise the query, and that valuation disputes are going to be there. Trade and industry has to be prepared for such type of queries. But as rightly said by Manoj, that my purchase price in the wholesale is 40,000. Now the similar examples happen in the pharmaceutical industry. I give the pre-samples, which is the trade, because I have to promote my product. I have to see the results to the patients. So physician samples are sold, given free. Now that pre-samples also will be taxed. Now those are having a MRP. And my strip is sold at, let us say my price of the 10 capsules is 100 rupees. And my free samples may be only 4. So I'll have to calculate the proportionate value of what I have sold to distributor or whatever the first invoice, not the retail price. So, but there is a gray area, government needs to clarify on this. That is the point. Now I'll come on. Let us say I have the target based incentive, right? I have said, Preeti, that you will achieve the turnover of 50 lakhs. Then I will give you a Singapore trip. So that target based incentive, you said in your presentation that Singapore trip will be considered as a perquisite and valuation has to be done based on that, and 194R TDS has to be deducted.
Right.
But let us say I give you the target based incentive of 10% goods free, same goods. Singapore trip free, there is a clarity, circular is also very clear, no confusion. But as my sales policy, I said, if you achieve your target of 10 crore, I will give you the goods free of worth 1 lakh. Whether that 1 lakh I allow to deduct the TDS under 194R or not.
So whether these goods will be manufactured?
I will talk on valuation separately. 1 lakh, when I'm saying 1 lakh free, it is always my transfer price free.
Right.
Yes. Because I'm giving the same goods.
Right.
So whether that target based incentive which I have given you the free supply, which you have achieved as a discount, is the name of a target incentive, whether it will cover under 194R.
Yes.
Yes.
So now the question is, if at all you have to give the discount in cash rather than giving the discount of a free supply. You see, this is what now every professional has to work out the skills to save the cost. Ultimately, if you give the discount very clearly, circular mentions if the discount, whether it's the quantity discount, value discount, volume discount. Volume is what? ultimately target. So one hand target incentive by way of a kinds or by way of a pre-supply, it will be taxable, but by way of a cash, it will not be. So give the credit note to that. It will not be taxable. Am I right? It will not be, TDS will not be deducted on that credit note.
As long as I am able to track the transactions and give a credit note, then that should not be a problem. But if I'm not able to track, and if I'm just going to say that I'm giving so and so, even though it is not in kind, it will still fall under 194R.
Now let's say you are the employee of the company, and employee has been sent to the foreign trip as a business foreign trip, and he gets certain dollars, let's say $250 or $500, and he need not to give the account of that. That is what is the travel policy almost number of corporate companies adopt. Whether that $500 which I give and make as my expenditure, whether that will be considered as a purse in the hands of employee.
Here now, 194R basically talks about business transactions. So in this case, if there is a transaction between a company and an employee, this will not fall under 194R. 194R is basically between two persons where there is a business relation or there is a professional relation. And if someone is doing any benefits are being passed on for carrying out these transactions, then certainly that will fall under 194R.
So very nice. Thanks God. Nirmala Sitaran ji ko sab employee ne thank you bolo कि employee को छोड़ दिया है. Now the same example I give you. I am a procurement person, expert, right? And company tells me you come to the China along with me. And they said, okay, भैया तुम कितना भी खर्चा करो, ये मेरा $500 per day मैं तुमको दूंगा. He will do it for his hospital expenditure, his travel expenditure, for his business purpose. Whether that $500 as it is which has been given to him, whether it will cover under the 194R.
Sir, if the company has paid $500 to him, okay, without any asking reasons or giving details or anything, so that in my opinion, that will be treated as a value of perquisite given to him, and on that amount, TDS will be deducted.
That is one point. Now, another point, since you are also working as a GST consultant, because all of us are direct and indirect and all taxes we deal in. So whether that $500 which you paid to me, I have to add in my GST bill and charge you GST as a Section 15 of the GST Act?
Certainly, it certainly there is a value to it. So GST will have to be charged on that $500.
It will, in my opinion, it will be because Section 15 says value of supply of services, and in the last section, last clause, it says in any manner. So anything which is being forming part of consideration will be treated as value of supply, and definitely this is going to create an chaos and how to treat it and whether it will be treated for GST, but it needs to be.
So now in all India, all information and GST is getting tracked, income tax is getting tracked.
Yes.
So such type of chaos and such type of notices from the government officers, you are going to have it.
So there is ample work for us.
So now the another part which I like to ask you, who are excluded? Suppose I incur the expenditure for other than employee. Now employee, you have made very clear that employees, whatever I do it is not in the relation of a business. Like a GST, employee and employer relations is out of that GST. So similarly, tell me which are whatever the things which has been included in 194R, which you have elaborated the part of this one. So any free gifts, any freebies directly or indirectly in kinds has been included there.
Yes.
Now what happens? I go and meet government officer and give the Diwali gift more than 20,000 rupees. Whether it will be considered as a Diwali gift or whether it will be considered as a bribe, that is my first question.
Now, they have exempted government entities because they are not into business or profession. So you cannot tax any government entities. No TDS can be deducted. But now what you are not supposed to pay any government employee. So it is illegal if we are giving anything to the government.
So who are excluded? One is the employee category, second is the government entities. And government employees, if you are giving it, you are not supposed to give it because it will be considered as a bribe. They are supposed to do the duty which they are duty bound to give. Anything you give to the government officers, whether goodwill gesture or anything else, though 194R will not be applicable, something will be applicable, because nowadays what I am seeing is, earlier what used to happen is, only for direct material we have the stores, we were keeping the inventory. Now whether for this type of material which I bring it, earlier I used to charge up to my accounts expenditure and never keep the accounts, only I used to keep accounts for control purpose.
Right.
Now whether it will be treated as a statutory books of accounts, I have to maintain it, the books of accounts of a quantitative record, how much I have purchased, how much I have distributed, and to whom I have distributed.
Yes, certainly if you want to give anything free of cost, one has to be very careful now, because you'll have to identify each and every item, because if you are going to give to someone, 194R is going to be there, and we have to take his PAN number, his STAN number, and if that is not available, then the impact is going to be more on us, because it might be 20% or it might be 5%, whatever is applicable. So we have to be very careful now. If you want to give gifts, keep it properly and pay the TDS, or else you will be into soup.
I'm not talking only the gift, but let's say certain parts which will come as a part of this. Now, how you control in the books of accounts when you are incurring the expenses on somebody, whether traveling trip, traveling expenses, air tickets, or something like that, or hotel bookings. So how the system has to be designed in the company so that proper we become the compliant and we deduct the tax under 194R correctly. Can you please elaborate?
What I feel here now, that when it comes to any reimbursement or any expenses which are being incurred during the business, so basically this problem is going to come from the consultant's perspective, because as far as employees are concerned, as we have discussed, that they are out of the purview of this. So now the contracts are going to be that consultant has to incur whatever the expenses are there, and then it has to be part of his professional services, and he has to and accordingly the TDS will be deducted, not under 194R but in other sections. So unless the expense is big and the consultant doesn't want to pay from his pocket, then what precaution he has to take is that he has to take the expense or the bill in the name of the company. So even though I make the payment or the company makes the payment, but the invoice has to be in the name of the company, then there is no impact of 194R. But if I don't take the invoice in the name of the company, I take the invoice in the invoice in my name, then naturally the 194R will come into picture. So we have to strategize that now going forward. whether we would like to take all that responsibility or whether it should be the responsibility of the consultant. It should be all inclusive so that we don't pay anything extra. It comes only as a fees and we deduct the TDS on the fees.
Now it means every expenditure I am booking it, especially those which can be covered under 194R. If no quantitative records are there in that, let's say hotel expenses or something, or food expenses or air tickets or all, first I have to ask myself whether it was for my business. Answer is yes, because otherwise it will not be accounted. The another part which will be there, for whom I have incurred. Then if it is the employee, out of question. But if anything other than that will be there, then what records have to maintain to justify that it was not for employee, it was for XYZ person, I have to have the PAN number. So what system you will like to advise to the corporates so that company will become the compliant?
So like vendor registration, what we do in goods and even for organized companies. So same way, if anyone is going to enter into any transaction of business transaction, then he has to take all this information. And if he wants to give benefit to anyone, naturally the information is available with him and he can deduct the TDS. One more thing I just wanted to point out here. What happens that if something I'm giving perquisite in kind, because we have discussed that we are giving mobiles and we are giving some other things, other electronics things. Now what happens if there is no monetary consideration or if there is no cash, but then I'm giving a mobile, suppose of 50,000 rupees. Naturally, what is going to happen? That he is getting the mobile also, plus I'll be deducting the TDS on that, and that benefit also he is going to get. So what government smartly has done, that in such cases, I have to not only I have to pay on 50,000, but 50,000 plus 10% on that. So on 55,000, I have to deduct TDS, because that is the benefit he's getting, because 10% credit he is going to get in his taxation TDS, and plus 50,000 more mobile or any gifts. So this is what we have to be very careful when something is going to be given in kind or cash, but cash is not justifiable to pay the TDS.
Now my question comes in. Let us say I wanted to promote to the new customer. And for the new customer, I said, yes, you will see it. I give you this product. More than, of course, 20,000. And you use it and give me back after 2 years, 10 years. Because period is not mentioned, but I mentioned you give me back.
Yes,
So then you said it will not be, if I is going to be return,
yes.
then 194 is not happening. Time period of return is not being mentioned. So can I give all those materials on my returnable basis and I don't keep on return, and then I write off into my books of accounts subsequently? How government is going to keep the track of it?
The object here is that if I'm giving something and if I'm getting in the same form, then it has to be treated as return. But if I'm going to give something and if I'm going to use it for a long period and then give it back, which is of no use to me, or if it is of little use to me, then that will not help. So even if, so the provisions, the intention of the provision is that, now suppose we take the case of influencers, what they have given in the circulars. So what is the object of these influencers? They promote your product. So they take the product, they put how they use it, and they give their comments so that they influence our sales. But suppose if they keep the product, then naturally it will fall under the perquisites 194R. But if they don't return me the same time, and if they say that I'm going to use it for 1 year and then send, so naturally the product value is going to go down. So according to me, it will not be of any use. They will still fall under 194R. So we have to see the reasonability and the object behind it. I think so.
So rightly, Manoj, you have said what is the object and what is the thing. So you have to ensure all the documentation. If it is a returnable, you have to show as a returnable register,
Yes.
and whether it is returned or not. And if not, when it is not returned in the specified period of time or reasonable period of time, at that time it may become the attractable as a 194R. So company cannot take a short step. And one thing which I am understanding from Preeti and Manoj, that if it is an expenditure, you have to talk on for whom you have made an expenditure. So when any invoice is coming to you as a bill passing or payment, you have to very clearly write in your narration and account book, this was for XYZ for your employee, then no 194R. If it is for somebody else, you have to prove that it is within the threshold limit, so I have not deducted. And if it is more than that 120,000, then definitely you will have to do it. But you will have to maintain the record, and record has to be retrievable, and record for per person, it should be a cumulative, so that to prove that it is not been this. And if it is a quantitative, you have to keep quantitative records. And kindly note, ITO, you have the one PAN number, whether there are different departments and different this one, that system every company will have to make it, because the purchaser is the purchase department. He doesn't know to whom is going to be distributed. TDS will be deducted by the taxation team, direct tax team or finance team. They will not know to whom it is to be distributed, but whenever it is going to be distributed, the PAN number has to be collected, and then tax has to be deducted on that time. Now my question comes in, whole the process will take time. I am purchasing today for the purpose of distribution, but I don't know when it is distributed. I paid. Now my distribution list from various departments will come after 3 days. Let us say Diwali gift, and it comes in January to me. Whether I'll have to pay interest on that?
No, the TDS says.
Because my distribution has happened in Diwali, October, November. And I have got all the quantitative details and PAN number from various departments in the month of January. So what is my taxable
Certainly.
deduction
The
event? Is the
taxable
when I
event will
give.
be- Yes, the event will.
Right.
taxable
So
event
when
will
I
be
give,
before
but
distribution.
I got it after 3 months. So whether I'll have to pay interest on that?
Yes, definitely interest will be applicable, because the event, taxable event, or the point of, it will be taxable when TDS has to be deducted before giving the benefits.
So now, can you say that whatever the earlier, what used to happen, this accounts payable was getting outsourced. In the trade and industry, it was getting outsourced. And outsourcing persons were only a very low profile persons. They were not knowing a taxation. So whether that practice has to change and it has to be given to the experts.
Yes, definitely. Now, each and every transaction, as you said, that every bill passing activity, every transaction needs to be checked or screened for Section 194. We are already checking under various earlier TDS sections, but now one more addition under Section 194R needs to be checked, and if TDS is applicable, yes, and then it should be whether what are the contracts, existing contracts are there, if either there is modification required, everything needs to be rechecked and revisited considering provisions of Section 194R.
Now suppose in all so many transactions, lakhs of transactions, I get missed, omissions may be there. What are the consequences of such omissions?
So naturally there is a interest that will come. And if something is intentionally, then there are penalties for it.
How
Sir,
they
if-
know intention?
Sir, if a transaction is liable for TDS deduction and TDS is not being deducted under that section, then under tax audit provisions and section 40 AI, the said expenditure will not be allowed as deduction under income tax.
So it is a heavy penalty.
Yes.
It is not deducted at all. So my 30% of my tax slabs, that much
It
is
will
the
be
tax.
added.
It is not a business expense. The
It is not a
moment you
business
don't deduct.
And if it
TDS,
is not the
a-
business expenditure, whether GST will be allowed, ITC which you have taken thereon. Because in the course of business and furtherance of the business.
But if I am going to give
So it was
something free
missed
of
out,
cost,
huh?
so I have to reverse the.
ITC.
No, but you see what happens is, I take a hotel for you. It's my business expenditure. Today I take the ITC there.
But going forward, if I am going to put it under perquisite, yes, still I can take the credit for it.
No. You are not deducted even the TDS, so it will be disallowed expenditure by the income tax. What happens in the GST, whether ITC will be allowed?
The transaction has happened from income tax. Yes, it is not an allowable expenditure, but from the perspective of GST, I'm still entitled.
The whole question
Because
is
that
how you
it's-
prove the test of
it's a
furtherance
business
of the
expense.
business and
No,
in
sir.
the course of business.
It is a business expense. So when I look from my audited books, it is a business expense. So I'm entitled. Now, only from the income tax perspective, you can say that it is not allowable. But as far as my
It's in the
books are
furtherance
concerned,
of business.
it is my business expense. So from taxation's perspective only, it is segregated separately. So I'm entitled for the credit.
Now, one part, what I am saying is, let's say I have given to X person who is a customer I have paid, or a stranger I have paid a gift. I have to deduct my TDS, which I have deducted 194R. Definitely is not going to pay me that amount.
Yes.
So again, whether that will be treated as that amount which he has not paid, whether that will be considered as my business expenditure, TDS expenditure, which I have deducted, but I have not got paid from him because I have shown him the payable. So what is the accounting treatment you advise in such cases? Because there will be a number of cases like that. Now suppose doctors are giving something. He's not going to pay me anything.
Now we'll have to segregate this transaction. Basically, first transaction is that I have given him something free of cost. There is a value to it. So as far as that value is concerned, it is an expense. I am deducting the TDS. Now comes the portion, since it is in kind, I don't have any cash of his in my hand. So naturally, I have to pay that TDS, which also becomes a perquisite. So the amount plus TDS becomes a perquisite. So as far as expense is concerned, it is the actual value only. But when it comes to the calculation of TDS, it is plus TDS. So and then the TDS amount, and that TDS amount, since if I'm not going to receive that TDS amount, so it will again be a business expenditure from the accounts perspective. But when I again look from the income tax perspective, it will be a disallowable. So it becomes a complete cost. Suppose if the value is 50,000, I have paid the TDS deducted on 55,000, but when it comes to the disallowance, it will be the GST what I am going to pay.
Here, now my question comes in. Let's see, job worker, I can give the machine, right, free of cost. And he can use for my manufacture of components, and the components will give me back. It is the returnable basis.
Yes.
But when it is to be returned, period of GST is 3 years. Let us talk on that.
Yes.
So whether 194R will come there?
These are two different acts.
So that the intention
No,
is
whether the machine which I have supplied to you free of cost on the returnable basis.
Yes, so the objective of section 194 is like the benefit or perquisite or anything which is leisure provided for a leisurely benefit, that kind of a thing. So in my opinion, this is happening in normal course of business. So I'm giving subcontracting is a very regular process of manufacturing. So I don't think so. Giving a machine will fall under section 194R.
Right. I also appreciate because
The
though I
question-
have given, it is my machine for manufacture of
Manufacture,
my
mine.
component. This is the
There
business
is nothing
transaction.
benefit
It is
perquisite.
not the benefits
Benefit
or
perquisite.
perquisite. For me, the object of this section is to tax
Tax.
and taxable net. So that is the objective. So such type of anything which is given in the course of a business, other than leisure or
Benefit.
what you say, bonanzas. So leisure, bonanzas, perquisites given to all any person other than employees will be covered under 194R. Now, one point which I'll have to ask is business entities. Now, one of the, if you know, in service tax also, this business entities were always a question mark, and then there was a definition, and then after that it was removed. In income tax, there is no definition of business entity. So how you treat it? Which is the business entity?
If I'm doing business or if I'm into profession, then so the business has to be there.
So
Or
under the head of
services.
income of
Yes.
income from business and this one, they are
Yes.
the business entity.
Yes.
Fair enough.
So any transaction, if I'm going to do for promotion of my business, or already I'm doing business, or I'm availing some services from any consultant under profession. then
Now let
they
us
will-
talk on charitable institute and political parties. Give such freebies.
So
Whether that will be covered.
that will get covered, because then I'll require the PAN number for them, and I'll have to
But
pay the.
whether it will be covered as a business entity.
They are not business entities. No? They are not business entities.
But they are giving the freebies.
So it is not an allowable expenditure anyhow. But it is not a, what falls under 194 is wherever I'm doing business and or availing some services of profession, only those transactions will
Exercise.
fall into 194A. If there is no connection of me with the business, and if I'm giving something, it will not fall under 194.
Now the most popular question in GST also it was CSR. I take a CSR project not as a mandate. But I make an expenditure because, and that is also allowable expenditure today. So whether that CSR expenditure I've given to somebody else, whether I have to take, and of course it is more than 20,000, so whether it will attract 194R.
No, first of all, as I said, that whether to whom I am giving the CSR, whether I am having any business transactions with him. If I am having any kind of business transactions with him, then yes, certainly we'll have to look from the 194R perspective. But if I'm not having any business relations, and if I still want to give something, it will not fall under 194R.
Now, whether that can be taken as this one. So suppose those persons who are not my customers in my list, and I give something to him, it will not cover.
Then
It will get covered.
but then it is from my future business perspective. Dekho, CSR is not from business perspective. CSR is basically that it's a social.
So can I give the garb of the CSR for doing such activity? How?
You have to look at the intention, because every time we cannot interpret it that way. The object of CSR
So
is
in
different.
such case, you have to analyze the facts
Yes,
of the
yes,
case
yes, yes.
and records and the way it has been given.
Yes.
Right?
Because they are
The
into business
intention was
transactions
for-
or intending to enter into business transactions, certainly will have to
And
look.
the intention was if any kind of benefits are provided for business promotion, then
That will also get fall.
Correct.
That will fall.
under 194.
If under the garb of CSR, if I'm promoting my business, then certainly that will then we'll have to look from that perspective.
Now, one of the good question it has come. Equipments given free of use based on the contract, such consumables required to use has to be purchased from the equipment supplier, say for the period of 3 years. Equipment has to be returned, and there is a chances of TDR attracted on the higher value of equipment treated as the perks. Answer is no. Already we have clarified that is in the course of a business. It is not in the course of a leisure or a perks or a bonanza. Right? Anything you want to add, but what I am trying to see from whatever you are deliberated so far, that it has not been just accounting now. It's not just booking of the expenditure. It's not only the treatment, but every details and narrations has to be very clear for whom that expenditure is made. So whether we are going toward the proprietary audit rather than income tax audit or a TDS audit or a tax audit, whether what government intends to do the proprietary audit of the companies. Manoj?
Nowadays doing business is not going to be easy unless and until you are not organized. And and as an individual or HUF, at least there is a concession up to 1 CR. But if your business is over and above 1 CR, then you have to be organized. You have to see that you keep proper accounting. You have to scrutinize the expenses if you are going to do anything towards our business associates. One has to be very careful whether it is falling under 194R or not. And things are not going to be the same. Even auditor's job is not going to be the same. They will really have to scrutinize the expenses, or else they will be at a suit, because for all these transactions, there is again a TDS return also. And at the same time, we'll also have to report under tax audit whether it the properly that TDS has been deducted or not. So it is going to be challenging not only to the businessman but even to the professionals. One will really have to look into the expense side more thoroughly, because the onus of paying TDS is on the person who is doing the expenditure.
Now, based on that, tax audit formats also has been changed. Am I right?
Yes.
So, and you have to report such transactions. How you see the impact which I am visualizing it? Companies' work has been enhanced or multiplied. They have to be absolutely accountable to the government that to whom such expenditure, for whom it has been made. For your own business, no issues. But for the benefit of others, leisure and bonanza, other than the trade discounts, everything under the umbrella will come under 194R. You have to keep a quantitative record. You have to design a system, and you have to mention on that. We'll take the question answers again. Let's see 194S. Can you elaborate on 194S presentation, please?
So, section 194S, virtual digital assets. So, virtual digital assets have been taxed under section 115 BBH now. So, virtual digital assets, they are being brought under the income tax net from 1st April 22, and at the rate of 30%, current the rate has been prescribed. So income tax will be levied on income generated on transfer of virtual digital assets. To track these transactions, TDS has been applicable with effect from 1st July 22 for at the rate of 1% on income on transfer of virtual digital assets. Now, virtual digital assets have been defined under Section 247A as any information or code or number generated through cryptographic means, so cryptocurrencies, which can be transferred, stored, or traded electronically. A non-NFT transactions, non-fungible token, or any other token of similar nature, and any other digital assets as may be notified. Now, how income will be calculated under Section 115BBH will be the total consideration received minus cost of acquisition. Please note there will be no deduction on any kind of any expenditure, brought forward loss, or any other loss of any type. And since it's not a capital assets, it will not be treated under capital gains, but it will be treated under other sources. The rate of taxes will be 30% plus surcharge plus cess. And the consideration can be wholly in kind, cash, or partly in cash. Now, the applicability and threshold limit, it will be the specified person has been defined. So in case of specified person means an individual and HUF whose gross total income, gross total receipts does not exceed 1 CR or 50 lakhs in case of profession in previous year. And secondly, they have also defined that individual and HUF who don't have any kind of any business or a profit from gains or business or profession in previous financial years. So there are two categories. One is specified person and another others. So the threshold limit for specified person is if for TDS purpose is if the consideration amount is greater than 50,000, then TDS will be applicable. For others, in case the consideration amount is greater than 10,000, TDS will be applicable. So what is the taxable event will be? The TDS will be deducted at the time of credit or payment, whichever is earlier. And in case the consideration is in kind, TDS has to be deducted before releasing the consideration. And the rate of TDS will be 1%. Now because if I have to deduct TDS under this section, I have to have the TAN number. However, for specified person, then exemption has been provided under Section 203A that TAN number is not compulsory. He can use the PAN as a TAN number and do the filing. In case the PAN details are not furnished, so Section 206AA will apply and the TDS will be deducted at a rate of 20%. And for specified person, the condition of higher rate of TDS rate for non-filers of ITR under Section 206AB will not applicable. In other case, we need to check that condition as well, that if the TDS amount is greater than 50,000 and if he has not filed the returns, then TDS will be deducted at the rate of 5% instead of 1%. In case there is an TDS applicable under Section 194O, that is TDS on commerce operator on transaction, and same under 194S, it will have an 194S will have an overriding effect. And though TDS will be applicable from 1/7/22, the threshold limit will be considered on annual basis. Now there are transactions of virtual digital assets taking place through an exchange, wherein the owner is other than an exchange and the responsibility is of deducting TDS will be of exchange. However, if the owner of the virtual digital asset is an exchange, then responsibility of deducting TDS will be buyer. And in case there is an exchange of virtual digital assets between buyer and seller, then both the person need to deduct TDS. In case the virtual digital asset is exchanged from through an exchange, then TDS will be the exchange will deduct the TDS. And if since this virtual digital assets are not classified as goods, So that will not be treated as goods, and TDS will not be applicable under Section 194Q. Also, it has been clarified in Circular 13/2022 that TDS will be deducted on only the net consideration exclusive, or no, and GST will not be included. Further clarification is being given that if a transaction is taking place through payment gateways, then the payment gateways did not deduct TDS. So this is all with respect.
Yeah, it means government has accepted virtual digital asset like a cryptocurrency.
Yes, certainly. Certainly.
Yes.
The issue was on the legality aspect only. So now they by taxing it, so now it is legal.
Right. So now you can deal in cryptocurrency.
Yes, certainly you can deal in cryptocurrency. You can keep cryptocurrencies. There will be exchanges. There will be brokers for all this. So now
So
it is
now means
official.
there are the three types of tangible asset, intangible asset, and
Virtual.
virtual assets.
Yes,
Very good.
yes, yes.
Now, again, I go back because 194H, very few people are there today dealing in the digital virtual assets. So I'll go again on 194R. Let's say you have already said that up to limit is there 20,000 threshold limit from 1/4/22. Though TDS will be applicable on 1/7. Whether it is better for the companies to analyze all such expenditure purchased and accounted in the books of accounts from 1st April, identify those limits to whom that has been distributed or given, or to whom bonanza has been granted, and then make a threshold limit or this one. What you will advise for the company?
Naturally, when we are doing audits, so that is the first thing that is going to come, that yes, what expenses you have incurred on this count from 1st of April to 31st to 30th of June. Because thereafter, even though if there is a shortfall in that value, then I will still get continue the exemption in the new period of 1/7/2022, or else from every rupee I'll have to pay I'll have to deduct the TDS. So this is going to be a big challenging task. Everyone should keep those things properly for these 3 months. Work out what are the limits.
Benefits already provided, so as to track that from
So that then
1/7/22.
we don't
if there
miss
are
it.
any-
We don't miss it and pay the TDS on time. Because if you don't pay the TDS on time, naturally interest is also going to be
Now,
levied on that.
it means I have to keep a track of all those things. Now, there may be a possibility that I might have spent more than 1 lakh rupees
Up to this,
up to
30th June.
30th June.
Yes.
And after that, I have not done anything.
Yes.
Then no
No.
194.
Any benefit of perquisite provided prior to 1/7, no, it's not. Any benefit which is provided prior to 30th June, TDS will not track to ahead, then and is exceeding 20,000, then I have to deduct TDS.
So can you elaborate? You mentioned in tax audit report also some new provisions have been happening, such transaction has to be reported. Can you elaborate exactly what and how it has to be reported in the tax audit report?
Section 34.
I'm not sure whether the new format has come for tax audit, because since the guidelines have also come recently and which is also binding, so that is a good part, that whatever the circular talks about, it is approved by the central government, and naturally it is binding on both, whether it is a department or whether it is SSC. So I think so 22-23 tax audit report is yet to come with the changed, because changes will have to be done, because that is going to come in the next year. So it is yet to
But
be
we need to get the
incorporated.
Now,
data.
I have one more question to ask. Let's say you have given me, I am your consultant. And you were pleased to see my arguments and you have got 10 crores case in your favor. So what you did, you have paid me some valuable gift of, let us say, gold coin of 20 grams, or let's say 30 grams. Hope you will give me. And that 30 grams, you will pay the TDS undoubtedly. 194 will be applicable. Whether that, whenever you are reporting, I have to show in my income tax return, I have shown. Whether that will be also considered as valuation dispute that I have not paid GST thereon, in connection with my business, not a love and affection as a gift, because that is also now taxable income tax to the other than relatives. So that 30 grams of gold, which whether it will be considered in my value of supply of services to you.
Yes, certainly. You have given an example of gold coin, so it makes sense, because if he's going to charge me less and take more on account of gold coin, so naturally there will be a dispute on that, and the department will naturally say that you have got more consideration, whereas you have raised less bill, so you'll have to pay, you'll have to charge, or you'll have to pay the GST on it. So yes, we'll have to go transaction by transaction and then take the call. But in these circumstances, the example what you have given, certainly that will always be challenged by the GST department.
So now is not only the income tax 194R, income tax and GST is going hand in hand.
Yes.
Otherwise also information is shared on the portal.
Yes.
So the advice to the industries that rather than finding such type of measures, it is always better to give the, whether it is always better to give the credit note instead of doing all those jamelas.
What happens, company is doing business with another company or another person. But when it comes to the people who are associated or who are doing this activity, even they have to be incentivized. So this process, I don't think so we'll able to cut down, because if I have to sell my product, it is again going to be person based also. So that person has to be influenced to boost my sales. So that will get reduced, but it cannot be totally, you can say that we can say no to it. So those things will still come, but only thing is now company will have to keep that in mind, that if I want to give benefits to any of the employees of that company with whom I am doing business, the cost is going to be whatever value I am giving him plus the TDS amount. I have to keep that in mind and then only decide on my strategy of business expense.
Right. Now I think we'll also have some question and answers from participants, and then we will conclude.
Yes.
Let's have the question and answers, please. He will be unmuted and this will be asked. Yeah. Any questions?
They have asked, please explain the reimbursement of expenses.
Yeah.
So now this reimbursement of expenses is basically if some consultant is providing service to a company. Now the expenses, what are basically the reimbursement of expenses? It can be towards the stamp paper, if suppose he is buying and then he is charging. It can be towards his travel, it can be towards his lodging, it can be towards his food and all that. Now, if the invoice, as I said earlier also, if the invoice is in the name of the company who is going to avail the services, then yes, it will be a business expense and you will not fall under 194R. But if the invoices are not in the name of the company, you pay that and then you ask for reimbursement, then there is going to be a problem, because then the valuation also comes into picture. So there will be 194J also that might be applicable in such circumstances. And if suppose if you don't pay under that, then naturally 194R will also come into picture. So now you have to see that if the company who is availing the services is going to pay, take the invoice in his name. Then there is no problem of TDS deduction. But if you are going to take something in your name, or if you don't have anything to justify your reimbursement of expenses, then it will be part of the value of your services and TDS will be deducted. I think so. I've made a point very clear. There is one more query that has come. If gift in kind value rupees 1 lakh and 10K also get benefit to customer as TDS, but I want to give only 1 lakh, how we will manage it? So you give a gift of 90,000, 10,000.
So no, you can, in this case, you can ask the recipient to pay the tax and as an advance tax and track that in your TDS return.
Usually what happens that whoever is getting gift, he doesn't want to pay that, because we are obliging as a business. The company is obliging the person to whom we are giving the benefit. So if I want to give anything, I have to keep that in mind that it is going to be a cost. Then only he will get obliged. Or else, if you are going to ask him that pay TDS, then naturally it's a business transaction. Then it is not a benefit or a perquisite. So that is what I feel. So if you want to manage everything into 1 lakh, then pay him 90,000. Then the GST, then the TDS on that, and that becomes the cost to it. And he will take the benefit of that 10,000 plus 90,000. He has already got it. So he gets the benefit of 1 lakh. There is one more query. If a product or a platform subscription, is given for free for certain period, say 1 or 2 months, to future customer, will be treated as perk under 194R. Now this is always going to be disputable, because basically this benefit comes when we are into business relationship. Now here you are not into business relationship with him. So this is always going to be a litigation matter, because department is going to ask for it, and we are going to say that we don't have right now any business relationship. So that will be always a disputable thing. So it is better that if you want to give something, you ask his PAN number and you pay the TDS. There's one more: reimbursement of petrol bills and driver salary for employee. Now employee is out of 194R.
192. It will be treated as considered as perquisites for 192.
For 192, it will not come under 194R, but it will come under 192.
There will be one more question. If the threshold limit exhausts in the month of January, and you further give the gift of 10,000, whether you'll have to deduct the TDS on 10,000 or 30,000.
This 10,000.
So it is only the 10,000.
Only 10,000.
After July,
So whatever after July, since now you have already exhausted the limit, so every rupee what we are going to spend after 1st of July, we'll have to deduct the TDS. It shows that all taxes,
if the threshold limit exhausts.
that is already
That is
addressed.
done.
That is addressed. Anything more?
Any questions, please?
You can retype if something is not addressed, because it is difficult to go back again in this chat box. So if anything is not addressed, you can retype in the chat box. We'll address it again. I think so. It is more or less.
Right. I think so if at all what I understood is, if what is that lesson from 194R is, first job every company will have to do it, analyze each transactions, each booking which has been made in the books of accounts from the 1st April, check whether those transactions should have been covered under 194R. If yes, make to whom it has been given, and what is the threshold limit, what is the amount, make it cumulative. So that you will know up to 1st July, that is the 30th June, what is the amount. And thereafter, you have to design a system. If you are purchasing the goods for the distribution, whether you are manufacturing the goods for further pre-distribution, as a bonanza, as a perks, then you will have to keep it a system that quantitative record of opening stock, manufactured item, broker items, distributed, to whom it has been distributed, when it has been distributed, what is the PAN number of such distribution, and do this. It is well easy to say, well easy to clarify. But when the companies having a turnover like yours, it is going to be very difficult until the system is designed. Today, majority of the questions, majority of the items are inventorized, but not such items. When such items are not inventorized, that is the first job of the company, to ensure that such items are inventorized and keep the record of such distribution. Valuation is that way comparatively less problem than that of this accounting of quantitative records. As far as booking of expenditure is concerned, to whom, for whom it has been booked. A proprietary term. Why for such expenditure is incurred? Because onus of proving or not deducting is on us, not on anybody else. Otherwise, Section 143(2), when it goes to the scrutiny assessment, or now you might have seen one of the provision which has been made, government has extended the period of reassessment up to 10 years if there is a reason to believe that there is some escape assessment or certain escape things. So that business expenditure which otherwise might have been disallowed, because you have not deducted the TDS under 194R, books can be open for 10 years, though there is a procedure that you have to give in writing, give the notice and all. That is a part. But system has to be there, well-proof, and to be kept record minimum for 10 years. And onus is on us. And therefore, not only the 1 year of a tax audit you are talking about, that tax audit implication is for 10 years. And not only you, your customers, your suppliers, your stakeholders, other than employees to whom you have given this bonanza, perks, value, perks, those also will be under the net, because they have to pay the tax, and if they might have not declared in that return, then the tax rate, instead of their normal tax rate, it will be 60%. Once it is noticed from your assessment, then they will go back whether they are declared or not declared, and thereafter catch them, and tax rate will be very high. So keeping the relationship with your customer, supplier and stakeholder will be at stake if you are mistaken, if you have not done your job properly. That is the reason this is the utmost important. 194R may be called as a giant killer to the ease of doing business. Maybe government may get some pennies out of that, some transaction net may increase, but definitely government is going to see all those things, because this is the new avenue which they have got. And in the self-assessment era, in the faceless assessment era, when personal benefits of the government employees are going to get less, all those questions will come, and onus of evidence, onus of proof lies on us. So I will advise all the corporate clients, all the taxpayers, to keep books of accounts very nicely. Keep the quantitative records correctly, not only the A item and B item, now all that C item also will have to keep it. Whatever you are charged up to the expenditure, that also proper accounting has to be done, proper narration has to be written, proper records has to be maintained. Then only you can be said that you are compliant 100%. All the best for keeping any queries and clarification. We are always available to you. Our email ID is available, all of you. You have got the mails so that you have registered. And anytime note our mobile numbers so that you can free to give any queries, and definitely be ready. Already system on 1st July, you'll have to deduct the tax. Of course, it has to be paid in August. But before that, kindly make it all the transactional analysis from April onwards. We are there to help you. Experts are there. And that is the reason I say all the best. I thank all the panelists, Manoj and Preeti, who has nicely analyzed the things. Every minute point they have dealt in, I think nothing was left unturned, so that there will be some doubts. Of course, new law, new subject, new queries, new business practices, or so many business practices, will have to have series and series of discussions. And feel free to call on us and get it clarified. We ensure you are compliant. We will make you compliant. Thank you. All the best.
Yes. Yes. Thank you.
Thank you.